Welcome to this Finovate webinar. I'm Sharon Kimathi, editor at FinTech Futures. I'm joined on the line with Jason Davies, VP at Enterprise Innovations at Flybits, and Rebecca Engelberg, Market Intelligence Manager at Flybits. Technology advancements and the proliferation of consumer apps have created a new customer experience paradigm that is changing how people are using credit cards. Customers expect brand interactions to feel like a dialogue, one that is relevant, timely, and personal to them, regardless of whether that's online or offline. In this webinar, we're going to learn how to leverage the power of contextual marketing to enhance the cardholder's lifecycle. We will also be live tweeting this webinar, so you can join in the conversation using the hashtag FinovateWebinar. Before we jump into the discussion, I'd like to remind you that we will be holding an interactive Q&A at the end. If you have any questions during the presentation, you can send them to us using the Ask a Question box on the left-hand side of your screen. I will now be passing this over to Jason Davies.
Thank you. Hello to everyone. Honored to be here, and thanks to Finovate for hosting this webinar today. I am the VP of Enterprise Innovation here at Flybits. Prior to this, I spent 10 years in the payment space with MasterCard International, focused mainly on the Canadian market, but then also working globally around the world with leading banks and retailers to optimize their payments business. So Rebecca, over to you.
Hi, I'm Rebecca, the Manager of Market Intelligence here at Flybits. And previous to this, I was doing market analysis and intelligence in the aviation space. So let's get right into it. Today we're going to be discussing innovation in credit cards, and we're going to divide this into 4 sections. First, I'll discuss the transformation of customer engagement in banking, and then I'll discuss the specific opportunity that credit cards have to transform the customer experience. Then Jason will discuss optimizing cardholder lifecycle with next-generation cardholder experiences, and he'll provide some very specific use case examples around that. And then finally, he'll end off with discussing the business value for banks in providing privacy for their customers. So how are banks engaging with their customers today? Typically through 3 channels: email, direct mail, and paid advertisement. And these channels are fine. They can perform personalization to an extent. So in an email, you can customize it by using your customer's name. As well, depending on the platform you're using, you may have some segmentation capability to hone in on specific audiences based on customer data. However, these channels are limited in the extent that they can perform personalization. The only channel that a bank can truly provide meaningful one-to-one engagement with a customer is through the physical bank branch. Right, so a customer that enters the bank branch is able to get service either from the teller or from a product specialist on their full suite of bank products with that particular bank. And in addition to that, they also have a 2-way dialogue open, so that based on the customer's feedback to the teller or the specialist, the staff there tailor their service and recommendations to them based on who they are and their unique situation. The problem is that customers, and particularly millennials, are not frequenting the physical branch like they used to in the past. Rather, they're visiting the digital branch, i.e. the bank's mobile app. And what do they find when they get there? Typically self-service. It's highly impersonal, and there is no 2-way dialogue. Rather, it's as if a customer entered the physical bank branch, but instead of people, it was filled with ATMs. The most typical activity that a customer does through the mobile app is check balances and transfer funds. The experience is the same, no matter who you are or your situation. And what a lost opportunity this is. Many leading banks realize that their banking app is severely underleveraged, And as a result, they're transforming their banking app from a servicing channel into a marketing and sales channel to provide excellent customer experience. Why are they doing this? Because leading banks understand that when a customer logs into the app, they have their attention. Banking is on their mind, and it's a current customer, so they have data on that customer that they can curate a relevant message or experience for them. Now, in addition to leveraging their proprietary data, Flybits works with leading banks to enrich this data, not just with proprietary customer data, but as well with third-party data and device-level data in order to take that experience from merely personal to what we call contextual. And this is where banks can really start providing effective one-to-one marketing and replicating that same high-touch experience that a customer has from visiting a physical branch, but experiencing that now in the digital branch, the mobile app. Moreover, not only is the digital branch able to provide these high-touch experiences, but because these leading banks are leveraging a bank-owned channel, they no longer have to rent third-party media every time they want to send another message to a customer. And this results in scalable contextualization, but most importantly, a much higher return on investment from a bank-owned channel. Now, how does all this relate to credit cards? What we see is that the opportunity to contextualize customer experience increases across two dimensions. First is frequency of touch. So how much investment does the bank have to do in the relationship over the life of that product? And second is data availability. So by the nature of that product, how much data is the bank able to capture on that customer, understand them, and potentially anticipate their needs? When we map the different lines of business across these two dimensions, what we see is that the credit cards group is really well positioned to provide contextual one-to-one experience. And when we consider emerging trends around credit cards, it's actually more important than ever that credit cards provide these best-in-class experiences. And when we talk about trends, we're talking specifically about disintermediation of the credit card from the transaction. So think about card on file and subscription-based models, your Netflix, your Spotify, your Amazon, or XPay wallets like Apple and Google Pay, or peer-to-peer platforms like Venmo. These applications are set it and forget it, where you put in the card once and then the transaction becomes invisible. The customer no longer has to take out the card for that transaction to take place. And because the transaction is invisible, the value proposition of that card gets pushed to the background. And we even see this in how consumers are talking about transactions day to day. Whereas in the past, if you were to buy, say, a coffee, the barista would ask you, how do you tend to pay for that? And you may answer, oh, through my Visa card or through my MasterCard. But what we're seeing today is that more and more consumers are answering that question by saying, I'm going to pay for that on Apple Pay, or I'm going to pay for this meal through Ritual, or I'm going to pay for my coffee through my Starbucks app. What this means is that customers are building loyalty towards the application that's interfacing with the customer and not towards that card proposition. So cards need to start asking themselves, how do they provide value to the customer beyond the transaction at every stage of the cardholder lifecycle? On that note, I'm going to pass it over to Jason, and he's going to go more in depth around the cardholder lifecycle as well as some specific use case examples.
Thanks, Rebecca. So what we're going to do now is we're going to walk through the typical life cycle, and we've bucketed that into 4 primary stages. The first being acquisition, acquiring a customer onto your card platform for a specific product, and then looking at activation and onboarding. How do we start to maintain that excitement the consumer has when they receive a new card product? How do we get them to engage in spending behaviors that are building a healthy revenue behavior for the issuer in the early days, and also to educate that consumer in that early days about the other ancillary benefits around that card, those being insurance coverages, their loyalty program that underlies that, and everything that a consumer gets with a new card product but typically might not have the time to review or inform themselves about. And then we're going to talk about usage. So how do we continue to make sure that the consumer is incented to keep that card product at the top of their wallet? That's their preferred card that they use every time they want to make a purchase. And make sure that we're combating compartmentalized spend. We don't want that consumer to use that card specifically for one type of transaction. And my mind goes to perhaps a struggle that some of you might be facing if you're a product manager for a co-brand card. Those consumers perhaps are only using that card in your store for certain types of purchases. So how do we make sure that there's a healthy mix across many industry verticals and spend types and form factors when a consumer is using that card? And then finally, obviously something none of us like to admit, but sometimes we lose cardholders out there. How do we actually use contextualization and personalization to minimize that and to make sure that at each stage we're engaging consumers in a meaningful, personalized way? So hopefully, if we do have a customer that ends up at that retention stage, it's much easier to bring them back to being an active participant in that card product, or you have a very valuable channel that you can in fact communicate with them on and perhaps find a new card product within your portfolio that fits their life stage in a better way. So, obviously these are stages that everyone, every bank, every network looks at in great detail. And I think what we wanted to do is walk you through use cases that apply to each stage of this life cycle, and then show how we think about personalization through an example of following one persona throughout a sort of journey. So let's go ahead and let's meet John. So we're going to start John's journey when he's progressing through the stage of his life. He starts at university, and we're going to move through graduating university, getting your first job, and those early days of starting your family. And as you can imagine, at each stage, there are different sort of focuses, interests for John, and how does the card issuer stay relevant and communicate with John in a highly personalized way at each one of those stages. So, John's just started in university. He has a retail bank offering product, so he's got perhaps a daily checking account with the issuer, but he does not have a credit card. So the first goal in acquisition is to acquire John into the credit card vertical. And how do we do that? We're going to do that by, one, cross-selling the checking account to those who don't have a credit card. And to do that, what we're going to do is make sure that we're sending an offer to those younger checking account cardholders who are showing a rising monthly balance, and incentivize them on entertainment or merchant-based discounts, depending on their preference. So in each one of these examples, what we're going to do is look at 4 building blocks that go into making up a contextualized experience. The first is we're going to look at the audience. Who do we target? And here we're targeting checking account holders who do not have a credit card product currently and are between the ages of 19 and 26. That data set could come from an external data source, or that could come from your existing CRM system as well. And then what we want to do is start to look at other data sets that we can combine together to start to give us an idea of context. When do we want to target these customers, and what do we want to target them with in terms of content? So in this example, we're going to use demographic data, we're going to use CRM data in terms of a product portfolio perspective, We're going to look at the average monthly balance that those folks are holding in their accounts at the bank, as well as past transactions, if available, and combining that with location data from the device as well. We marry all of that together to derive the proper context of John, and then make sure that we're actually giving him relevant content to his context at that point in time. In this case, John's a big fan of coffee, as most university students are, I think, in their early days. So the offer here is, with application for the card, we're going to give, and upon approval, he's going to receive a $50 free Starbucks card. And then, how do we actually get to the presentation layer? How do we deliver this message to John? Well, that comes through a push notification. So when John is close to a Starbucks in terms of location, that's when we're going to push this content, this message to him through his mobile banking application. So he'll receive a push notification from his bank notifying him that there is an incentive to sign up for this new card product, and that takes the form of a $50 Starbucks gift card. So now, John's pretty excited about that offer. That fits with his lifestyle. It's hit him at the right time. He's walking by Starbucks in the morning. He's got a few minutes. He completes that application. And great news for John. He becomes approved for that card. So now we start to go into the second phase of the life cycle, which is activation. So activating cardholders traditionally has always been a bit of a challenge, because you have that initial excitement of applying for the card, being approved for the card, and then there's a little bit of a wait until that card product arrives. Now, obviously that is changing with the ability to instantly provision cards into digital wallets and have people activated right away. But I think by bringing personalization to this stage as well, you start to be able to immediately have a very personalized for you experience for John from day one when he starts to interact with that card product. So the goal in activation is to increase his rates, his activation rates, by incentivizing the right type of spend behavior from day one. And the solution here is to offer new customers a subscription incentive to Spotify with a free first month activation bonus. So if John activates and puts spend on the card in those early days, then what we will do is we will reward that behavior with a free month subscription to Spotify, very relevant to a younger credit card holder in university. So again, let's just review the building blocks that go into making up this experience and then delivering that content to John. So what we want to do now is start to look at an audience which is combined of not only demographics data, looking at the ages 19 to 26, that university age, but then as well start to look at some CRM data that's coming in. So we know that these are new credit card holders at the bank. Then what we're going to do is combine certain data sets together to help us derive context of John, demographics, looking at new recently approved credit card application, past transaction activity, if any, and perhaps his activity. And activity can be both a trigger and something that we perhaps don't want to do. So for example, in this case, maybe we don't want to send John a push message while he's driving. We want to wait until he stops, and perhaps engaging activity we can actually interact with the content. So what's the content that we're going to deliver? As we talked about, it's going to be, if you activate your card now, John, you can have your first month of Spotify free. And how this is delivered again through a push offer during his morning commute at university. But what we want to do is perhaps look at the activity, and we're going to push that message, perhaps not when John's driving, but when he's finished driving, and now maybe he's walking to class. He's got a few more minutes to actually interact with that content that we want to give him. As you can see, this is a great new way that you can increase activation rates, because you're actually giving John a very personalized interaction from day one. So he's got that card, perhaps he hasn't activated it, or perhaps he has activated, but he's low active in his spend. Here, by delivering relevant, contextualized interventions to John through the mobile banking application, we start to build a very high-value, relevant interaction with John from day one. So when he's receiving a message about his card from his issuer, it's something that's meaningful to him, and that will continue to drive, high levels of engagement, very much so from day one going forward. So now John's sort of skipping through the years, and he's now started to move on. So, John's maybe a recent graduate, and he's got his first job, and now he's starting to look at different interests and abilities. He's got that income coming in, so maybe he starts to capitalize on his want to travel a little more. So his life stage is changing, his context is changing. So how do we respond to that with personalization? Well, this is a perfect upsell opportunity. As we note that John's spending behavior is starting to change, perhaps his account balances are starting to go up. We see that he has, every 2 weeks we're seeing a salary deposit come in. This might be a great time to look at an upsell from that basic student credit card that John had in his university years to something that is more travel rewards based, because that fits his lifestyle at the moment. So our goal is to upsell John from that basic card to a more rewards-based travel product, and then evaluate. The solution is to look at, hey, how do those basic credit card customers that have increased activity in travel rewards, and what do we do in terms of looking at how is that spend translating into different categories and when's the right time to reach them. So here again, going back to our building blocks of how we assemble a fully contextualized intervention to reach out to John, we want to look at our audience. Again, that's basic credit card customers that are between the ages of 23 and 25, new grads. And then look at them and then say, oh, okay, and then we want to look at data. If we can get transactional data from his existing card, maybe we see that John's booked a flight. Maybe we see that he's making frequent cross-border transactions. That indicates that John is traveling. And as well, we start to see that with John's newly found income expansion that his credit score is going up. So he's looking like a better and better candidate to start to focus on the delivery of an upgraded product. So our content that we're going to push to John is you could be collecting benefits from a travel rewards card every time you make a purchase. And then when we want to do this is every time that John actually visits the banking application. So every time John comes in, we want to give him a message to remind him that his bank has different card products that are probably a better fit for his newfound desire to travel a little more, and the bank can help him travel more often by collecting rewards points every time he makes a purchase. Okay. So John's traveling, he's enjoying life, and then the years slip by, and now what we want to do is start to look at, again, making sure that we're continuing to see a broad level of usage from John. And how do we do that? Well, here what we want to do is look at diversifying his purchase categories and start to incentivize John as well, not only to swipe his card or to do a chip and PIN transaction, but also start to engage in all the form factors of payment. That could be through tap or contactless. It could also be ensuring, if relevant, that John's loading his card into a digital wallet, if that's a strategic priority for you as an issuer as well. And here in this solution, what we want to do is start to target customers who aren't using their cards at quick service restaurants. So John's using that card very regular. However, when we don't see any quick service restaurant transactions, and in that category, particularly here in Canada, that's a very highly penetrated vertical for contactless acceptance. So whenever you walk into a quick service restaurant, you have the ability to tap. The issuer traditionally has spent a little bit more to enable that functionality on your plastic or through your integrations with other digital wallets. So why not incent John to make sure that he's not only tapping when appropriate to bring more purchases onto your card product and displace cash, but then also to ensure that he's fully engaged, and as we start to see regular contactless usage, also drives top-of-wallet behavior as well. So we want to drive all of those behaviors with John. And the way to do that, again, is through making sure that we're delivering to John a very personalized, contextualized experience, so he's getting the right content at the right time to start to build that habitual behavior of tapping. So again, going back to our building blocks, we look at audience. Who do we want to target? Well, here, as we talked about, John like people. So here we're going to have credit card customers who pass by tap-enabled merchants, but we don't see any tap transactions in their transactional profile. Here we're looking at transactional data categories. We want to start to map location as well, and map that against tap-enabled merchants. And then finally, as well, ensure that this is being targeted to people who are exhibiting low tap or no tap levels of behavior currently. Content, what we want to do is remind John that there's a tap-enabled quick service restaurant close by. Why not grab a snack and save some time and tap that card as well? And in terms of how we deliver that message and amplify that to him, again, through that mobile banking application, each time John taps, what we want to do is let them know that there's only X taps remaining to unlock a reward that we're offering. So for example, that might take the form of tap for 4 purchases this month and receive a $10 credit on your statement. So what we're trying to do here is engaging John in a very contextual manner when it's relevant to him, reminding him of the offer, and then using that as a capability to build a spending behavior that John starts to get more comfortable with tapping his card at merchants where it can save him time. So in our final stage with John, we move into retention. So here again, John's progressed, his lifestyle might have changed, and what we want to do is make sure that we're retaining customers who are showing signs of card misalignment. And what we mean by card misalignment is that the value prop on the card no longer matches the spending behavior that we're seeing from that cardholder. So how do we start to make sure that we move them from their existing card product into a card product that perhaps is a better match for their spending behavior? What we want to do, again, with John, who is now sort of finished traveling, he's not eating out as much, he's got his, he's married, he's got his first dog, he's got his first cat, maybe he's got his first child, and he's spending more time around the house, and he's starting to renovate. So what we want to do is look at that, and we want to target customers like John who've had a decline spend of 50% or more over the last 30 days, but we're seeing a bit of a transition in terms of where they're spending, and offer them a term loan or a balance transfer offer, right, to bring him back. And perhaps tied to this as well, maybe we want to make an offer of moving John from his travel rewards card to a cashback card, because maybe that reward is that loyalty product and that loyalty platform is just a better fit for him at this life stage. So for our final visit back to the building blocks, what we're doing here is, as we said, we're going to target credit card customers who have declined in spend over the last 30 days. That can come obviously from not only the bank itself, but that could come from a partnership from your network partner as well. Data, we're going to pull monthly spend in. We're going to look at the monthly fee level, credit scores, activity, as well as whether or not John is Wi-Fi connected, and we'll explain why that might be important in a minute. And then content. What we want to do is deliver a push notification again to get John to take advantage of a balance transfer for him to re-engage. We think his spend has gone to a competitor's card, or perhaps offer a term loan to expand his relationship with the issuing bank. And there, amplify, and this comes back to why having the context of John being connected to Wi-Fi is important. John's finished the day, it's in the evening after work, he's got a few moments at home when he's sitting down, and that's when he receives a notification from his issuer that perhaps he wants to look at exploring an offer of a short-term loan or a balance transfer to help him in his home renovations. So you can see here how in each stage of the life cycle, what we've done is started to introduce personalization and contextualization in each one of these stages. So it becomes much more of a personalized for you conversation with John, rather than what we have today in more of a mass personalization or a very structured journey that, no matter what the behavior is of John, he's going to be receiving the same message. And there's very low levels of personalization in that. It's not making John feel like his issuer understands his life stage. So what we want to do is, make sure that we have the ability to leverage contextualization in each one of these life stages to really maximize the relationship that the bank has with John. So in terms of maximizing that relationship, as we start to move into, this world of competing fintechs and, different sorts of user experiences that Rebecca was highlighting earlier, whether that's, personalization through a Netflix type of experience or Spotify or Google or Amazon, the truth is that these expectations of personalization follow with a consumer and they come back to you. So a consumer is expecting a very similar level of experience when they visit you as a bank and as a credit card issuer. So what we want to do is make sure that, hyper relevancy, making sure we're delivering the right content to the right consumer at the right time, is very aligned with privacy, and they're not mutually exclusive because there's a data exchange that has to happen to make this ecosystem work. The consumer has to give us permissions to gather data from them, use that data to deliver to them some sort of value or some sort of messaging. And if we're doing this right, if every interaction has a value to the consumer, no matter how small, that's how we start to build on this highly trusted relationship that the consumer has financially with a bank, but now it's also crossing over to a trust in terms of their lifestyle and their connection to the bank as well. So here we start to see that as we understand that consumer, we deliver relevant value to that consumer, we build a stronger trusted relationship with that consumer where that only continues to open up sales opportunities for you as a bank. When you interact with those consumers, there's a trust level there, and that moves you forward into turning this digital channel from what used to be sort of a informational or transactional channel. Now it becomes much more oriented to becoming a very powerful sales channel for you as well. As Rebecca was saying, turning what that personalization in the branch was and bringing that into the digital platform as well. So again, as we know, most consumers do everything on their phone, and that's only going to continue, and that's going to move from not only the mobile device, but also into the area of IoT, whether that's through chatbots, Alexa, the Google Assistant, it doesn't matter. What we have to make sure is, again, that even in that channel, the value exchange that we were talking about, that for the exchange of personal data, there's a high level of valuable content and offers and service and information that comes back to me as a consumer, that's maintained in those channels as well. And the idea of personalization at scale and contextualization at scale also requires all of us as marketers, as product owners, to start thinking about engagement with a consumer in a different way. It's not about sort of thinking about, the high number of impressions that I can get that might be within a goal of a traditional digital marketing campaign today. It's not about that. It's really starting to look at making sure that you are targeting the right consumer, perhaps on a one-to-one basis, with the right message at the right time. And those interactions might be fewer over the course of time, but they're of a much higher value. And what they deliver back to you is a much higher level of engagement. So, from that sub 1% open rate that you might be seeing today in mass email campaigns that might be slightly personalized, to seeing a 20% engagement rate through a highly personalized piece of content that's delivered through the mobile device, that's really something that you have to think about and realize that although it's not necessarily in this space of personalization as much about quantity, it's more about the quality of that interaction and building that long-term trust with your consumer. So when the time is right and there, you are starting from a point of trust, which gets you much further down the road of completing a further sale with this customer as well. So what I'm going to do is I'm going to turn it back to Rebecca.
Great, thank you, Jason. So to conclude the presentation, I want to leave on this note. Since the 80s, banks have been trying to digitize the teller. And this started with the introduction of ATMs and progressed into other banking innovations. And the reason for this is because consumers were demanding convenience from the bank. With the introduction of these innovations, no longer did consumers need to wait in long lines or even visit a physical branch necessarily. They could identify the location of an ATM or perhaps do some online banking. But what we're seeing today is a reverse trend, because now we have digital native services that are providing a high level of convenience for customers. And not only providing a very high level of convenience, and think about Netflix, Spotify, Amazon, but they're also able to capture data and provide on top of it a highly engaging, personalized experience as well. So like Jason said, this is the new expectation from consumers, and it's resulted in a reverse trend where consumers originally were demanding convenience from the bank. Now they're going back to the bank and they're demanding personalization again. But not personalization from the physical branch. They're demanding personalization through the digital branch, through the mobile app. So when banks have so much data on customers, much more than a Netflix or a Spotify, what they have to ask themselves going forward is how do they provide a superior customer experience to those technology companies? Thank you, and that concludes the presentation.
Thank you, Rebecca. Just a quick reminder, if you haven't already done so, I encourage you to submit your questions via the Ask a Question box at the bottom of the screen. Let's take a look at the questions already sent in. 1. How do you enable these personalized experiences?
That's a great question, so I'll take that one. Finovate provides 3 layers of technology for banks in order to enable these personalized experiences. And of course, it starts with data. So it's really important that the bank has a capability, and Finovate provides this, to assemble data. And that goes beyond just assembling the bank's proprietary data, but also third-party data, so maybe merchant data or other partners, as well as public data, like weather data, for example, and device-level data. So this could be the activity level of a customer, whether they're driving or they're walking, whether they're logged into a Wi-Fi network, or the level of their battery. And Finovate takes all this data together in order for the bank to make that actionable. In the second layer, Finovate provides an orchestration tool in which the banks can then very easily act on that data through setting up conditions of how they're going to define which customers can experience these curated campaigns. And then finally is the delivery layer, where Finovate enables the bank to leverage the mobile app, and not by replacing it, but by sitting right in the middle for a very easy and quick implementation. And you can think of this similar to a Twitter feed or a Facebook feed, an always-on, continuously updating, personalized feed, and the ability to intervene with push notifications as well at a crucial time of intervention. So these are the 3 high-level ways that Finovate helps the bank enable these personalized experiences through data assembly, orchestration, and finally delivering that experience through the mobile device.
Thanks for that, Rebecca. Another question. Do you think there is a consistency in how banks are defining personalization?
That's a really interesting question. I think that Unfortunately, no, there isn't consistency, and that comes with the good and the bad. I think some banks are more advanced in terms of their journey of personalization. However, I think where they do align is in their goal to become much closer to their consumers and have a much greater understanding of those consumers, and what are their interests. How does that bank become much more of a lifestyle partner to them versus simply just a transactional brand? And the story there really becomes that it's the same goal to do that. The way that they get there might be a little different, but everyone is moving towards that goal of understanding the consumers at a much deeper level, and then responding to that with relevant offers and content at the right time. And really, that's where our platform comes in to help do that, where, as Rebecca was saying, that the key to understanding a consumer and their context and then personalizing messages to them is all at the data level. And combining one or two data sets is probably no longer sufficient to really get a good view of the real context of consumer. You have to assemble multiple data sets, not only internally but also externally, to really help drive that contextual understanding of your consumer, and then make sure that you're delivering the right content to them. So I think everyone's marching towards the same goal. They're just at very, very different stages. And I think at each one of those stages, that's when you see these differing views on what personalization really means, whether it's we are personalized, we have variable fields in an email message, or we have some web content optimization capabilities that might differ. And they're targeting that at the audience level, but what we're talking about here is getting down to another level of detail and making sure that we're responding to multiple data points that are indicating what the true context of that consumer is, and then making sure that we're delivering the right content to them in the right channel at the right time.
Thanks for that, Jason. What other areas of a bank would benefit from personalized experiences?
Yeah, another good question. It's actually almost every area of the bank, I think, would benefit from improvement in personalization and contextualization. Certainly, we've seen high levels of interest not only from the payments team at a bank, but also from the retail products group, those folks that are looking at deposits, checking accounts, almost any of those areas. Personalization certainly is of high value to them. We've also seen great use cases emerge from the wealth management space within a bank, as well as the insurance groups within a bank too. All areas where certainly personalization is of high value in those interactions with consumers. But then also, as they start to connect through the Flybets platform, there's also a great level of data sharing, and starts to really bring those groups together and break down the silos in the bank, starting to share that one consumer might not be ready for a credit card offer, but they are exhibiting behavior that perhaps are ready for a lending product like a mortgage or some sort of line of credit. So the contextual understanding of a consumer generated by the connection of these data sets really starts to amplify the cross-sell opportunities for a bank, and that's why we start to see this product and the end result of personalization become of high interest to almost every business unit contained within a bank.
That's really interesting. We've got another question. Does this solution use AI?
Yes, we do have a very strong AI and machine learning capability, and we're continuing to improve that. The interesting thing about AI is, as our founder and CEO, Hossein Ranamal, will tell you, is there's multiple types of AI, and where we're going now is we don't want to remain siloed in one type of AI. So you might use one for fraud analysis. We might use another to identify certain types of consumer clusters. And I think the interesting part of where we're going with our platform is looking at how do you normalize that data and start to be able to combine multiple types of AI to inform our contextual rules to really deliver, a very high level of personalization, not only based on current data, but perhaps also based on the outputs of AI models as well.
How many use cases can you support?
Hi, that's also a great question. So Flybits is very flexible by design. It doesn't have canned use cases, and the ones that we went through were simply just for illustrative purposes. The platform itself can support any use case as long as the data is available and exposed to Flybits. So we encourage the banks that we work with to really think out of the box past traditional marketing tactics and really take the mindset of the customer on what are their needs and their goals day to day and how can the bank help them achieve that. And whatever that use case may be, again, as long as the data is available, Flybits can support that.
Really great. We've just got a couple of questions left. How will this work with our existing tools to segment audiences or create content?
That's another great question, and that flexibility that I was talking about in terms of use case support also extends to working with a bank's full tech stack. So no matter what segmentation platform you're using, maybe it's Salesforce or whether you're using some type of content creation software with Adobe, the source doesn't really matter. Flybits is built by design to ingest any segmentation source or content source in order to leverage it and bring it to life in front of the customer.
Our final question, does this require you to replace the mobile app?
No, it certainly does not. How we build in the display capability is through two methods to develop a presentation layer within the mobile banking app. So the Flybits has a full SDK, and we also have a concierge widget. The concierge widget is sort of a pre-assembled selection of APIs and content templates that allows for a bank to bring this level of personalization to their mobile banking app in a flexible and easy to install manner. So by copying in a few lines of code, the concierge experience can be brought to life on your current mobile banking application, and this would be distributed out to users through perhaps a typical app upgrade push through either the Google Play Store or through the App Store. So very, very low lift in terms of bringing this to life on your current mobile application, as well as very easy for using the Flybits platform to start to connect those disparate data sets you might have internally together, normalize that data, and allow your marketing teams and digital channel teams to use that data to start to build highly relevant and highly personalized experiences from day one. That's really the core value proposition that Flybits brings to the table, is that we've worked very hard to hide all of that IT complexity that usually comes along with trying to assemble these data sets both externally, internally, and then how do you create a tool that's easy for a lot of your marketing organization to use to actually mine that data, use that data, and then build and deliver these contextual experiences. And that's end-to-end what the Flybits platform is about, is hiding that complexity and making it easier for marketers to interact on a highly personalized basis with their customers.
Well, thanks for that, Jason. It looks like that's all we have time for, I'm afraid. Thanks for joining us today, and thanks to Jason and Rebecca for your interesting insights. There's certainly some key takeaways I think we're all leaving with. Please do complete our short survey at the end of this webinar to let us know your thoughts and any recommendations for future webinars. It should flash up on your screen shortly. We'll also be sharing the on-demand version with all registrants, so look out for this in your inbox. Thank you and goodbye.